wide enough, baby. If you need me, call me. No matter where you are, no matter how far.
Okay, so welcome to this live trading session, and good evening from me. And like I said, welcome to this super trading night that will be followed by a super trading day. My name is Dennis, and I'm going to do my best to enlighten you with today's FOMC statement. How is everyone? And can you please confirm that you can hear me and see the chart that the mouse is moving on? Very good, Kai. Very good. Welcome to the session. And everyone else, we have a very interesting night ahead of us. There are two scenarios that can happen tonight. Either the bomb is going to go boom, or we're not going to get much information and the boom is going to be next week on Tuesday and Wednesday and the days after that. So it is very important to clarify something for anyone here who is new or rusty or just doesn't have enough time to sharpen their knowledge. Confusion is very good for you. Whenever you don't understand something, just stick to it, because being confused is your mind processing the information. So confusion is a very important part of the business. If you attended or watched the video that I released for the trading chamber for the ADP, which was a couple of hours ago, you would have noticed me open a little more than a dozen trades in which I got a return of just about over 20%. I still have a couple of trades open, and what we're going to be using tonight will be the system 23 to trade today's market. There's a lot of things that are going to happen today, and a lot of volatility is going to kick in, because in about 27 minutes from now, the FOMC statement will be released. It is very important to note that this is one of the very few statements where there will not be a press conference and there will not be a release of the dots. So, how will the FOMC impact the market? There are two simple scenarios, and I'm going to go over them, but before I do go into that, I have a couple of things I need to say. I'm going to go over to oil, and I'm going to give you the best information I can right now for oil. So, I'm going to go over crude and WTI. I've made some money here, and I've been making money on this. I gave you, if you follow the forums and our videos, you would have realized that I gave buy indications right around this area and sell indications right around that area. I clearly stated that we will buy till 52 and not higher than 52. We would then sell, and we will continue to sell till 44. That's what we're doing. We're selling till about 44 before we go anywhere else. As you realize, there are no take profits. Positions have already been closed on oil, and here they are. There's plenty of positions. I just have to get out of the market. And the reason I had to get out of the market is because there is far too much volatility right now, and it's going to be really dangerous to trade. Stops can get hit for no reason, and then I just prefer to risk about $500 out of the 2,000 that were made. So, oil is heading to 44, no doubt. There is nothing that will stop it. And something else just came on the weight of oil's shoulders, and that is Russian production oil has literally set a new post-Soviet record. Crude oil inventories came out massively high too, with a huge difference. And the technicals, especially the 90 rule here, the 90-week rule, works so strongly on this double top formation here. And like I said, there is nothing in this market that will stop oil from reaching 44. After we come there, we'll see where we go. But for now, we are pricing in oil to go to 44. Now I'm going to go over some things I said earlier. Firstly, I'm going to go over the promotion for the Nest. The Nest is a service that is very unique for Pips Matter and very exclusive to the market. Nobody else provides the Nest in this industry, and here's what you get with it. You're going to receive a comprehensive analysis of your account. That means if you've traded in the past with your account, demo or live, we'll analyze this account. Me or one of our other top traders will directly guide you to the promised line. We will directly head into your account, see what you're doing good, help you do more of that, see what you're doing bad, stop you from doing it if it's destructive, or if it's something that could be constructive, teach you how to do it better. Point number 2, the Pips Matter risk management system will be specifically created for your account. That means if you have $500 in your account, we will create a risk management system that will literally help you never go bust. If you follow that system and follow system 23 to enter trades, there is no way in hell that you're going to lose any, well, not any, but you're not going to lose your account. It's normal to lose money. I lose money all the time. The most important thing is that I finish every month in gains. So this includes, the risk management system includes your goals, and it also includes your risk tolerance. So this is really important. Point number 3, you're going to get the concise information of all of your trading pairs. Every favorite trading pair you have, we're going to analyze it in short, medium, and long term. You're going to be able to get to know those pairs better than you ever have before. And point number 4, you're going to be in a constant loop for all specific information such as breakouts, trends, changes in trends, and other aggressive market moving information. Yes, Paul, there is audio. You just need to, can everybody hear me? Paul is asking for audio. You all can hear me, right? Okay, Kai can hear me. Well, Paul says he can't hear me. Just a second, let me just reply to Paul, people. Okay, for anyone that's come in late or that can't hear me well, this session is being recorded and you're going to be receiving a recording of it. But that recording might not be too good for you after the FOMC. So like I said, the point number 4 is you're going to be receiving, you're going to be in the loop for all changes in trends, high aggressive market moving information, breakouts, and so forth. So this is all very important. Let me just tell Paul something quickly. Okay, so the markets are beginning to move. We're just about 22 minutes away from the FOMC statement. You guys have to keep in mind something very important. Sometimes the Fed likes to play with the market. And what they will do, they will release it sometimes early. Last year, for example, they released it 15 minutes earlier. So 15 minutes prior to the time they were supposed to. So if you see something crazy going on in the markets, don't get scared. It's just the Fed or some big money moving the markets. So don't be scared. Make sure you're taking small risks today, nothing major, and yeah, be safe. So I'm going to continue with everything else. Right now, guys and girls, we're at a very incredible time and moment in history. These US stock markets are at a nominal all-time high. The government bonds are at or near all-time highs. Now remember what I said about the bonds in the nest, something big is coming in earlier today. Now we also have central banks worldwide which are sitting at 0 interest rates or less because things are too hard for them to it's too hard for them to raise interest rates to a partial 0.25, and the reason they're not raising them is for the fear of collapsing the entire system. This is in brief. In traditional economics, this makes no sense. After a recession, banks should and must increase interest rates. But after the 2008 recession, once everybody lowered their interest rates, nobody is raising them apart from the Fed this year. Everybody is lowering them, which makes no sense when we're supposed to head into another crash. And this is totally normal. These are normal cycles that happen all the time. So like I said, in traditional economics, this makes absolutely no sense. But I need to tell you that we are way far out of traditional right now. We are in the extreme stages of a collapsing system, and it's only normal that it will happen again. It happens all the time, nothing to fear, it happens all the time. Review economic history and you will see that it pretty much happens all the time. Now, when a crash happens, nothing makes sense. Nothing makes sense from the traditional, normal perspective. If you look at things normally, you'd say, how did this happen? but it happens. If anyone's Jewish here, I'm not Jewish, but I'm going to be speaking about something. I like numbers, not math, but numbers, specific numbers. So I'm going to head into something else here. Don't judge, just listen very quickly, and I'll explain very quickly. To make something clear, I'm a man of earth. I believe in God, but I don't believe that there is 350 gods on earth, and the 350 gods plus. I'm not a Christian, I'm not a Muslim, I'm not a Jew. Like I said, I'm a man of the earth. I study all religions, and here is something important from the Jewish religion. The Shabbat year, which literally means release, also called the sabbatical year of Shivit. I can pronounce these things, but literally Shivit means seventh. So Shivit is the 7th year of the 7-year agricultural cycle mandated by the Torah for the land of Israel, and it is observed in contemporary Judaism. Here is something important to note about the markets with taking the number 7 into perspective. I use many different numbers, and I'm going to go over them really quickly, but I'll go over this real fast. Okay, so Paul is asking me for tips, but I can't type and speak, so I will get back to him pretty soon. Okay. In the 3rd quarter of 2015, during the end of the Shemite, I can't pronounce it very well, but Shemite year, world stock markets had their worst quarter since the last Shemite year, which was in 2008, right after the beginning of the crash. And then they bounced back up. In January, this January, the world stock markets had their worst starting month to the year in history, and then they bounced back up. And most recently, the best example I can give you is right after Brexit, which was the 7 days, 7 weeks, 7 months, and 7 years since the Shimat end in 2008, the world stock markets had their worst day in history and then bounced back again. Simply just went poof, back up. Now, for example, I use many other numbers. I use number 90, 144, 12, 7, for example, 90, 144, and 12, they all come from the Christian Bible. But it's not about the religion that I look into. I look at historical dates, facts, and things like this. This is a really long story, and we don't have the time for this right now. All of these numbers work very well for me and many other people, but I'm using me as an example, and you can see my accounts, and they're growing. And the reason they're growing is because what I do is really good. So if you follow Pips Matter, you're going to notice that we provide very strong accuracy on big market moves. We open tons of trades daily, boom, 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 here and there. We lose many of them, but the big thing is that when we win big. When we lose small. I can lose 20%, but I'm going to make 200% right back after it. So I lose small, I win big. That's how you win in the markets. None of this is random. It is clear we are onto something. It is very clear that we're onto something. And thus, we continue to expect massive volatility and crashes. So like I said, not my performance is random. I'm saying that everything in the markets right now is not random. What's happening is totally deliberate and will continue to happen. And all of this big volatility and all of these sudden market moves are not random. They are deliberate. So everything happens with a purpose here. Now, we predicted many of these big market moves, and many of them arrived as scheduled. We've also predicted small moves, which are worth thousands of dollars with a lot. We've seen free crashes this year with massive volatility. And ladies and gentlemen, volatility is usually a sign that something is terribly wrong. The final crash, the biggest black swan ever, which will create an economic depression that always happens with economic depressions, surely will be the worst thing that we've seen so far. And the reason it's going to be the worst thing is because of the sheer size of the world and economy right now. The things that happened after the crash like this, it's very important to know the things that happen after a crash like this. For example, we're always in constant wars. All over the world, there are wars. What happens after a crash is, for example, the 1930s. The 1930s Great Depression was followed by World War II. The banking crisis was followed by World War I, and so forth. That means deeper warfare. I'm not going to go into this kind of things, but like I said, nothing is random, and the need to create organized violence and maintain control of society will significantly increase as it did in the early and mid 20th century. I'm not going to go into this too much because it's too much gibberish. I'm going to go over to a person many people know if they heard of the book called Black Swan. If you've ever read the book Black Swan, you know a person called Nassim Taleb. You would know that the Black Swan means what the Black Swan means. It usually means very high and unexpected volatility and an unexpected market crash. This person who's created a very wonderful, amazing book was recently interviewed by Yahoo Finance. And he said, the markets will ultimately crash again, although this time it will hurt much more people. And this is what I'm saying. There is much more people in our world right now. The economy is much bigger. The S&P 500 is much bigger than it was then, and you can see that here. This here is the .com. S&P 500 lost about 50% of its value. Then we have the housing market. Started in 2007. You see that there was a first test, went down, price went back up again, went down. This is exactly about 90 weeks from each other. That's why I say, 90 months from each other. So if I go to the monthly chart, you will notice that this is about 90, that there is a difference of about 90 months from one crash to another. Okay? If you go like this, you can see that we're also almost at the 90 level on the first top. Then we go to the second top, which can be separated by weeks. We're going on to 90 weeks soon for this double top, a sideways double top, and then you have a rounding top over here. But I'm going to be speaking about this in depth a little bit more. Now, it is important to note that too, that the Fed isn't supposed to be paying so much attention to the markets. But lately the Fed appears to be hesitant every single time there is a market hiccup. And in reality, the Fed's job is not to pay attention to the markets, it's to create the markets. And if there's another big market or economic downturn, the Fed doesn't have many tools left to intervene other than a scary prospect of negative interest rates. So the only thing the Fed can do if the market starts crashing, if the S&P 500 starts going down 10, 20, 30, 50%, because both of these crashes here are roughly about 50%. Okay? They're roughly about 50%. That means when this crashes, it's going to go roughly about 50%. 50% is a really big deal, such a big number. That means the price will head roughly from where we are right now, it will head down to somewhere here. Okay, that is a huge move. That is a 7,000 pip move. Massive stuff. If you have 10 lots open on this, you're looking to make an easy $6,000 or 5 or 4, but it's big. Now, when the S&P crashed in 2000, it dropped by almost 50%. It did exactly the same thing in 2008, and it will do so again the next time it crashes, whether that's this month, next year, in 10 years. But that's exactly what it's going to do. It's absolutely normal. These are totally normal things, and there's nothing wrong with them. Now, I've been speaking a lot. We're down to the last 11 minutes, about 10 minutes, and I'm going to put one final note here. If nothing serious happens today, it's going to happen next week. I advise everyone to take caution, not to rush too much, and it's always better to lose small and try to win big than lose big and trying to win small. So we have 90 months difference from one to another. We have about 90 months difference from here to here. We're almost there, and we're having a rounding top. It's going to be very interesting to see what's going to happen today. My prediction in today's ADP report was that the actual FOMC minutes will be dovish, and they're going to be negative for the dollar. Now, the reason this could cause a bit of a panic is because the market has already priced the Fed hike in. This is a long run. I work in a business where I eat because of other people, so the information I provide has to be very delicate. But I don't like hiding around the bush and telling you this and that and this and that. I'd rather give you an opportunity to make serious returns rather than, tell you exactly what everyone else is telling you. I've done my research. There are strong indications that the dollar could be weak right now, but there are also very strong indications that it could be strong right now. So it's a bit of a dilemma. This morning, I was certain it would be weak. Right now, looking at Euro USD, I don't know. Okay, if it does go up, it's going to go up to 114. And we have about 9 minutes. GBP USD is at the top of pretty much a channel. There are good indications that it could head down, but it could also break out of the channel. Anyway, we'll see what will happen. It's going to be very interesting to see. I've got 2 accounts running right now, so I'm going to be paying attention to these accounts. Like I said, today was a good day. Even this month has started out well. As you see, we have risk to play with, so that's risk capital to play with. So these positions are not of too much of a worry to me. It is just very important to make sure that we're ready for the other ones. I will not be reading what the FOMC minutes are. We will release a post after that. I will read them in depth and then see where we're going from there. It's going to be much easier like this. Please watch the other videos as well. There I speak a bit more about DAX and when we're expecting DAX to crash. That should be probably next week. There could be very strong indications that maybe in 2 weeks or 3 weeks. Between next week and the following 2 weeks, we can see DAX heading all the way down here. This is a very special time in the markets right now. Oil, I've already told you where oil is going. It's going to 44. Right there. I'm going to make it dotted so it can be seen easier. This is where it's going first. If it breaks this level aggressively, then we're going way down. We're going down to 36, which is right here. 37, sorry. So target 1, target 2. And I think that would be enough. Probably would be a rebound after that, but I mean, nothing certain. Anyway, I'm going to be focused right now here on USD JPY. That would be the best scenario to see what could happen due to the sheer amount of volatility there is in the yen. We're down to the last 7 minutes. You're going to see a lot of volatility kick in the last 2 minutes, so my stops will probably get hit on my other account. Before we go into anything else, does anybody have any questions for me? Is anyone trading a live account right now during the FOMC? That's a better question. Or even a demo account. How's trading going, Adam? Adam is the only one that said that he's trading. ADP was very good. Yes, it was. Yes, it was indeed. So we have like 5 minutes left. I don't have much to tell you. If you watched today's ADP, if you haven't, then watch the video. There's a lot of information in there, and you can clearly see how the systems work and how they make money. We have about 3 minutes for questions. So if you have anything specific you'd like to ask, I'm more than happy to answer those questions. Okay. Now if you have any questions, guess we'll just have to wait a bit in silence and see where we go. I'm just waiting for a couple of entries to open up on whatever pair that would be. Okie dokie, we're down to the final minute. Let's see what's gonna happen. Okay. They're gonna be late. Looks like they're gonna be late. Okay, the federal funds rate came out is the same as before, and I can tell you it's probably gonna be weak for the dollar, which is expected. Everyone has to read the statement right now. Lots of volatility is kicking into the market, and we're gonna see what's gonna actually happen. Anyway, I still think it's gonna drop, so gonna be just right. Okay. I really don't see what. Oh, nothing's, nothing's really happening, so I think it might actually go down. Anyway, I'm gonna take this down. We already have this down. Yeah, definitely. It's a race that I'd like to take, and we'll see what happens with that one. Yeah, well, FOMC statements, I guess the Super Thursday tomorrow will be more exciting than this. But like I said, there would be two scenarios. It would either be nothing or everything. So I guess everything will happen on Tuesday when Trump probably wins the elections. Anyway, USD JPY. This was a really good trade. Can't believe we're not in it anymore. Yeah, so there's not much that's really happening with this. I mean, the only thing I can do is just sit here and read the statement, but that's one thing I'm really not going to do. Can somebody just send me a dot as a question, and I will send you where you can read the federal fund statement. They're basically, what I see here is they're talking about inflation again, 2% target. Thanks, Kato, you're the best. Here, this is where you can read the FOMC statement. But here is the most important thing I see here. The committee continues to closely monitor inflation indicators and global economic and financial developments. Against this backdrop, the committee decided to maintain the target range for the federal funds rate at 1.4 to 1.2%. The committee judges that the case for an increase in the federal funds rate has to continue to strengthen, but decided, for the time being, to wait for some further evidence on continued progress towards this objective. In short, same shit, same absolute shit as before. 2% inflation, that's what they want, and the current inflation in the US is not looking so good. The latest basically inflation figures state that it's 1.5%. But I remember last year, the US inflation rate, man, it was like 1.2. That means there hasn't been much change. There hasn't been much change in the US inflation. I mean, look, 2015, we were 0.7. We are now 0.5. We're at the end of this year and we're at 0.5, 1.5. The last time the US was above 1.5 was 2012, and that was when it started dropping in inflation. The peak of 3% inflation was in 2011. As you see, there is not much reasons for the Fed to hike. There are far too many good reasons to keep the federal funds target where it is. Because think of it like this. The world economy is connected. If something happens in China, it affects the US. Something happens in the US, it affects Europe. Something happens in Europe, it affects the rest of the world. This is how the markets work, and this is how they always work. So it's very simple. inflation will not reach 2% by December. Maybe the Fed will raise the interest rates in December. That's not for me to decide, that's for them to decide. But I still see zero good reasons for the Fed to hike this year. I see no good reasons. I mean, I even bought gold on the other account. It's small profits of 66 pips. Nothing serious, but eventually it's going to go higher. So, like I said, the inflation table is not very impressive. It's not very impressive whatsoever. I mean, I don't see it reaching 2%. There are higher chances of it dropping than anything else. Anyway, this wasn't the best thing for the dollar. Tomorrow will be very important. Friday jobs report will be one of the nails that could seal in a Fed hike. Probably not, because I still believe that the NFP will come out weaker. Always, I need you guys to remember that we have successfully predicted every single NFP so far as pips matter. So what I'm going to be doing tonight is I'm going to be writing up a post. I'm going to be writing up a post for this, well, everything that's happening in the markets. This post will pretty much explain to you from A to Z what's happening, what you can do. It's basically a post about black swans. That's pretty much it. Does anybody have a question for me, or I'm just going to have to shut this down? No questions? It can be anything, whatever you like, in regards to trading, of course. Remember what I said about oil, that's where we're going. I see copper heading much higher, gold heading much higher, but just bear with me. Open a Pips Matter account, you'll see the forums there. I'm going to fill up those forums so much, there's going to be so much information in there. Anyhow, I'm going to be shutting this down. I'm going to be monitoring these trades and other ones on the other account. Both of the accounts are right now in profit. This one is much larger profit than the other account, but the other account finished with a decent rise again. So that's something to look forward to. I see AUD USD possibly breaking out of a very strong triangle, but I'm going to go over this in detail. Kato, thank you very much for watching this. I really hope together we're going to be making some serious profits very soon. Everyone, thank you very much. Have a very good night from me. Kai, thank you too. I will speak to you hopefully tomorrow. We will. Guys, good night. Girls, good night. All the best to you and your families. I really wish you success, happiness, and good health, of course. Take care, and all the best from me. Bye now.
Start being thankful for what you do got. Let's get it to him, baby girl. Hey.
That's right.